It's that time again. The annual conference of the American Society of Ag Consultants, otherwise known as ASAC, is going to be held in Fort Myers, Florida, this November 4th and 5th. Kurt Covington is one of 9 professionals who will address the conference. The other speakers who will cover a wide range of topics represent Florida Farm Bureau, Florida Citrus Commission, University of Tennessee Institute of Agriculture, National Ag Law Center, Risk Mitigators and Advisors, Tyler Associates, as well as the lead economist for dairy at CoBank, and myself, Chrissy Wozniak from North American Ag. The day and a half of presentations will be followed by ag tours on Tuesday afternoon at Echo Farms, one of my favorite places here in Fort Myers. Attendees will experience farming at its most creative, with unique demonstrations, plants, and techniques being used to help farmers and urban gardeners in developing countries. A second tour at Echo will showcase simple technologies that can improve food, water, and shelter for millions of people. A third tour of a hydroponic grower is also being planned. For more information and to register, visit www.agconsultants.org. That's www.agconsultants.org. See you there. And welcome to North American Ag Spotlight. I'm Chrissy Wozniak. Our guest today is a well-known figure in the commodities and futures markets. He's had extensive experience and expertise in analyzing and providing insights into various commodity markets, including agriculture, energy, and metals. The Hightower Report, under his guidance, has been recognized for its market analysis and research services, catering to traders, investors, and other professionals involved in commodities training. He's traveled the world meeting commodity producers, commodity consumers, foreign government officials, and those who process commodities for food and industry, giving him a broad understanding of all layers of global markets, from origination to recycling. Today, we're going to talk about his upcoming presentation to the Unconventional Ag Conference on December 12th on the topic Key Region Trade Flows, the impact of agriculture activities and policies in key regions around the world and on U.S. markets. I would like to welcome founder of the Hightower Report, David Hightower. Welcome, Dave, and thank you so much for joining us today.
Thanks for having me.
So can we start just by giving us a background, your background, and how the Hightower Report began?
Well, I have a degree in finance. I started back in the early 80s working for a grain house in their research department. Well, I was in the pit actually for about 3 months. I was in the Treasury bond pit. Oh, wow. And then I was hired by the research department. I was there to bring them onto the computer age, to take the data that they had and take it on 40 different markets. And so I had to work with analysts from all market segments. So some of these guys and gals had been in the business for 40 or 50 years at the time. And so I learned from them, what is the data they're giving me, and it gave me a broad knowledge throughout all markets. And for about 10 or 15 years, that wasn't necessarily that important or helpful. But over the years, the transition has come to where the markets, instead of trading separately, are now beginning to trade in sync and react to each other. So I had a unique global education by a lot of very experienced traders, and I'm fortunate for it. And I'm glad I got to see what's going on in the ground, because from production to consumption, who knows, at any given time, somewhere in there, it's going to be the element that's driving prices.
Yeah, for sure. And last year at the Unconventional Ag Conference, I saw your keynote. It was titled Structural Material Shortages, Historically High Prices and Extreme Volatility Are the New Norm. So you warned us that the interest rate would continue rising, that borrowing would become difficult. Now, looking back over the last 12 months, what's your assessment of what's taken place?
Well, I hope I'm not right on this, but we have a thing in the markets that's called bond vigilantism. And in the past, when Greece and Italy, and even in the Asian currency crisis, when countries begin to stretch the bounds of their fiscal capabilities and begin to put too much risk in their debt. It's the job of the market to warn by putting that particular policy under pressure. And I think that's what has sent the interest rates up much higher and faster than what the U.S. Federal Reserve wants to see. And so they're trying to send a loud message through to Washington that not only can we not continue to extend the debt ceiling, but the way we govern and the shutting down of the government and not having the ability to get together on policy is another reason why they're threatening to downgrade the U.S. So, our gridlock in Washington and all the bipartisanship, it's now about to get into a really serious thing. And even the Joint Chiefs of Staff last week indicated that the biggest threat to the U.S. right now is not militarily, it's the U.S. deficit.
Wow. That, like you said, I hope you're not right. Hopefully we can get this cleaned up, right?
Right.
And this year that you're going to be speaking on key region trade flows, the impact of agricultural activities and policies in key regions around the world on U.S. markets. So what will you be covering in this presentation this year?
Well, I think we'll talk a little bit about currency because the dollar has been so dominant, and that means the purchasing power for a lot of countries, particularly in Southeast Asia, has really been undermined. And I think that we're at the end of the rate hike cycle, and the U.S. has held higher interest rates since before COVID. And now that is starting to narrow a little bit, but also especially in commodities, the growth in demand is going to come from Asia. And so depending on the currency flows, I mean, this is nothing new, but it's going to continue. That's where the marginal demand is going to come from. And it continues to be stronger than what people anticipated.
So what major trends do you foresee in commodities for 2024 and beyond, and how are they going to impact the North American farmer?
Well, I think that we're going to see more strategic supply building, and maybe countries like China will not be as willing to utilize those strategic supplies just for achieving lower pricing. Just as we see in the Strategic Petroleum Reserve in the U.S., we occasionally take oil out, we put oil back in. But I think the COVID supply chain situation is going to probably make more commodities held up within the marketing channel instead of moving in and out, so to speak. And, the grain market and the grain certificates and ETF holdings, all these things have a ripple effect downstream. And so I don't think that there's going to be as much movement both ways. So the grain will flow one direction, and that's the way it'll stay.
Right. And as you know, the geopolitical events it's a lot of chaos around the world. So how are these current events, the global economic conditions, impacting agriculture activities throughout the world and consequently commodity prices?
Well, the trade tensions between the U.S. and China has absolutely resulted in them buying from South America as much as possible. And we have just seen the signs in the last several weeks that trade is normalizing between the U.S. and China, perhaps because the South American supply is starting to run a little low as they're at the end of last year's crop cycle. But there's also today, I noticed that Boeing may be restarting its 737 MAX sales to China. And, we did see a lot of buying of U.S. grain in the last 2 weeks. So I think that the Chinese economy and President Xi in particular, I think they're a little bit in trouble. The economy has really slowed down. It's not showing signs of coming back. The public's got a little unrest going because they kept the isolation around a little bit too long. And they had these protests that really China's never allowed that to happen before. So they had a little broader. And so the people, I think, got a little confidence from that. And as the economy dragging on and not recovering, it really is starting to erode the power of President Xi. And also this week, President Xi and President Biden will meet in California. So it's improving there. Trade relations with the rest of Southeast Asia are very good. And you have to realize that 800 million people that are down in that Vietnam, the Philippines, Indonesia, all those areas are quite significant population, and they're all very young. And if you go to Hanoi or to Singapore or wherever, you see the intensity of people on the street, and it's starkly different than here, especially in some of these cities with the post-COVID with people working at home. It's really a contrast in the business districts of these two areas.
Great points. And given your previous keynote on the structural material shortages, how do you anticipate these shortages evolving? Are we out of it? What implications might we be seeing on ag operations? And what are we seeing now in terms of supply chain efficiency?
Well, I think you're going to still see some residual costs from the high energy price, but I also think that that prices are so cheap that we're near a low, and that will that'll probably result in all these users having forward supply. So the demand may stay weak through the middle part of next year. So I'm unfortunately for the producers, the prices are vulnerable, even though they're extremely cheap levels now.
Yeah, that makes sense. And how do you see the current interest rate environment affecting ag financing?
Well, I have to have a qualification that I've been extremely bearish, and I have huge investments and positions betting on interest rates continuing to go a lot higher.
Wow.
And I think we've already seen a little bit of the rates and financing go higher. But unfortunately, I think it might go a lot higher than we realize. We have this strange historic relationship in the marketplace now where it doesn't cost more money to borrow money for 30 years than it does for 5 years. And when you learn in your finance and other classes that the interest rates are determined by the term structure, so you add up all the risks of the time frame, and it should just be more risky to borrow money for that period of time, and so that yield curve is out of whack. And so even though the Fed is trying to put a damper on rates going up, the rates of financing are going to be paid for operating loans and other things are probably going to continue to rise. So you better watch your costs this year.
Right. So what advice do you give in addition to that to farmers in managing their financial portfolio or their purchasing decisions in the next
Well, I mean,
year and beyond?
you have to try and maintain your input costs. Natural gas and fertilizer should have been coming down a lot more than it has, but it'll probably continue to come down as soon as we see that the winter. So I would not be buying my fertilizer and other natural gas related products yet. But as soon as we find that we can walk through the northern hemisphere winter without a severe shortage, then I think the fertilizer companies are going to have to give in and begin to lower those prices. But I also think this is one of those years in which early in the year we could flirt with the cost of production. So farmers need to employ hedging strategies using options. And I think bankers with these higher interest rates are going to become a little bit more forceful when it comes to hedging these positions, because the outlay to plant a crop is massive. And right now the revenues are not massive. So it's it's one of those years where you have to have a leap of faith, where you plant and maybe you're not going to make much money at that level. So secure your input costs if you can. And secondly, you need to make sure that the hedging you do does not get in the way of higher prices. And there are like selling futures and some other things, fixing the basis. those are the kind of things that can eliminate you from seeing price gains. And so this is a year in which, believe it or not, we're so low in the range, but still put options are probably, I think, the best strategy.
Great advice. And Europe and the US have been seeing incredible advances in ag tech. How are advances in technology influencing agriculture, and what role do you see technology playing in shaping the future of farming and commodity pricing?
Well, I think we've already seen a huge impact with the seed technology. Obviously,
Yeah.
the corn market was way out in front with the developments of drought resistance, insect resistance, disease, dryness, all these elements. They really did an outstanding job on shaping that. And you know what? It never would have happened if we had not had ethanol in the equation for the farmers and the corn to be worth more, to be able to go out and spend that money on technology and research and development. And now we're seeing the same thing with the soybeans, in which the biodiesel, we're now going into jet fuel and so forth. And so I think you can probably continue to see advances made in terms of yield and disease resistance, just because the energy markets are going to keep prices maybe higher than they would be without the biofuel.
Yeah, that makes sense. And there's a lot of government policy coming down that is maybe not in the farmer's favor. I think we can agree, especially coming from California, and some of that regulation is trying to move eastward. So how do current and proposed government policies, like subsidies, environmental regulations, how are they impacting the ag sector, and how should producers prepare for those potential changes?
Well, I would say that it's going to be more onerous. I mean,
Yeah.
you're depending on who's elected. We may have both top running candidates in jail by the time we get to the election, which is going to create its own uncertainty. But given how the 34 to 36 trillion-dollar deficit, to expect any kind of subsidies and other protection. I don't see that coming. And every farmer knows from the EPA side of the equation, this is a really scary thing from my perspective, is that the employees at the EPA make policy decisions. It has nothing to do with the people that are elected for a living. It's kind of the personal choices of people that are in those departments. And so that we've seen a lot of very difficult things that have come out that's forced on the farmers, that I think that's going to continue. I think it's going to get worse. You have to plan on it to get, it's not going to help the bottom line.
That's right. And I think producers need to embrace that they got to have a voice in this too, right? We can, being only 2% of the population is a huge problem.
Well, and a lot of other industries, particularly the oil sector, they do a good job of getting high prices, meaning they take advantage of when they do have high prices to sell. And farmers are going to have to learn that they need to do that instead of encountering that moment of greed where they think it can go higher. When you're offered really good rates of return, you have to really start to bank them, because we're in a period of really high input costs, and so you have to have high prices at the end of the year. You can't just wait, put it in the bin, and hope it's going to get higher next year. It's and with interest rates, I think interest rates could double from here.
Wow, really?
Yeah.
Oh,
Well, I've been in the business 40 years, and these rates are abnormal. These are not normal rates, and we're at the bottom quartile or distribution that we have. So, and unprecedented borrowing, QE2. I mean, we really don't know in the U.S. Within $2 trillion what our deficit actually is.
Right. And so on a positive side, are there any emerging markets or opportunities in the ag sector that farmers should keep an eye on for potential growth or diversification?
Well, I mean, you always have Southeast Asia. You still have China. You still have India that
Mhm.
are in the midst of an upward revamping of their diets. The prosperity is going up. Wages in China. They used to have such a massive competitive edge, but now you're starting to see that middle class develop a little bit, and we forget the size of China, and you have a slight increase in their middle class, it really matters. And then look all the way down through Southeast Asia, and you also find out a lot of young countries with a lot of energy and so forth. So I think the regular consumption demand, you're going to see the old areas, Europe and the U.S., maybe the per capita slow down there, but just the sheer numbers that are more important in Southeast Asia than anywhere. And so I think that's one thing. And I also think, the oil markets are large and the grain markets are small. And so when you talk about, we only have 10% of ethanol in a gallon of gas in most cases. And the oil markets every day are like 90 million barrels per day of oil consumption. So just a little bit of a change in how much biofuel is required from corn and soybeans. It's a massive thing, and we can't begin to be a full replacement for some amount of oil that's lost. And so, the world aviation business. I think it's this week that we're starting some. We have the authorization to begin some biodiesel use in airplanes.
Great.
And so what that does is that gives us maybe a higher floor in prices than we would have otherwise.
Yeah, that's great. And one last question for you. Why do you do this? What are you passionate about in your work?
Well, I like the fact that every day brings a new story, and the story's hidden sometimes, and the way the world is tied together, and the ripple effects that it has. I start at 4 o'clock in the morning. I mean, I'm typing at 4 o'clock Central Time. I'm looking around to the entire world to find out what is going on, and I've developed one of the most widely read wires because a lot of professional traders know that I'll take the time to dig through all the nuances that happened overnight. And sometimes, if you're really not experienced, you're not even going to know. You're not going to know the difference between a headline and something that's really important.
Wow, yeah, it's really fascinating. And then where can people find the Hightower Report? Where can they sign up?
Google Hightower Report. It'll be on the
Yeah,
top list, I'm pretty sure. So
yeah.
Hightower Report is about 34 years in the business, and we've done a lot of, we're a research department for a lot of clearing firms and brokerage houses.
Right.
So that also gives us input.
Yeah. Oh, that's great. Well, thank you so much for joining me today. That's a lot of information and it's quick and easy to digest. So I guess we all put our seatbelts on or keep them on
Exactly.
for the next little
Unfortunately.
while. Yeah. Yeah. Thanks to all who are watching or listening as well. If you want to learn more, the links are provided in the show notes. If you haven't yet registered for the Unconventional Ag Conference to see David's full presentation and the rest of the speaker lineup in person, head on over to unconventionalag.com. Don't forget to subscribe to North American Ag Spotlight on YouTube, Rumble, or Telegram channels. And the podcast is available on Spotify, Apple, Amazon, or wherever you listen to podcasts. If you like the episode, I'd love it if you shared it. Have a great day. Did you know that at NorthAmericanAg.com, we are committed to providing valuable resources for farms and agribusiness? Find your next podcast in the Best of Ag podcast library, delve into our on-demand webinar series, check out the latest in ag news, or treat yourself to a new hoodie or tee from our swag shop. Head over to our subscribe page to join our community and be the first to know about what's happening in the industry. North American Ag provides daily ag news and weekly podcasts covering ag tech, ag policy, new products, family, and faith. North American Ag gives farm families and ag professionals insight into what's happening in agriculture throughout North America. Ditch the mainstream media. Join North American Ag.